What's going on, guys? 360 Digital Closing Bell here. I am your humble correspondent, Michael Tanner, joined as always by the executive producer of the show, the purveyor of the show, and the director and publisher of the world's greatest website, oilandgas360.com, Stuart Turley. Stu, how are you doing on this beautiful July 31st morning? It's a Friday.
It is a Friday. You have a hall pass. It's a beautiful day in the neighborhood, and we got a stacked show today.
Wow, if you want to talk about one of the busiest shows we'll probably have today, I'll forewarn you, if you don't like earnings and you could care less, just turn us off. I mean, I would listen to the Adamantine sponsor read. And we've got a couple things, but really there's going to be a large chunk where we've got to cover earnings. Besides that, we're going to check in with the levels of crude oil. The 360 official, non-official fund is suspended. But guys, thank you for joining us. Episode 37 here. Like I said, we're recording this at 7:24 a.m. here. So market's about to open here on this gorgeous Friday. I am ready for this week to be over, Stu. I mean, talking about having to, day-to-day living in all this earnings stuff, woof, guys. But really, before we get going, I need to tell you about my friends at Adamantine Energy and what they're doing for social risk. And you might be asking yourself, like, what even is social risk for the energy industry? Trust me, I've asked my question that many times. And really, it's not just, you think it's community opposition to all of these projects you're doing. But it's not. It's way more than that. It's everything from the success of the divest of fossil fuels movement, all of this investor engagement that's going around your ESG programs, to all of these individual states setting these wildly ambitious decarbonization agendas. Trust me, we've been following Boulder. If you've been following Boulder County here in Colorado for any length of time, you know that to be true. Social risk right now, it seems like it's everywhere and multiplying like zombies. And that's why your company needs a strategic partner to help you assess and prepare for all of this social risk. And Adamantine Energy is the leading consultancy that's helping the oil and gas sector do just that. They're led by Tisha Schuler, love her. She's the former CEO of the Colorado Oil and Gas Association. And they're helping guide energy companies just like the ones you work at to help explore your exposure to social risk and your options for response and how. And really, the other thing is what your peer companies are doing, because that's the key. That's a lot of the key part in access to capital. It seems high school, but now you're comparing yourself to everybody else, not just what, now it's, whoa, okay, I may have gotten a C on the exam, but what was the average? So, I mean, it's a little high school, but that's how all of this capital stuff works. It's where you are relative to your peer companies, not necessarily just how good you are. So that's why knowing exactly where your peer company's at is an important part. That's what they can help you out. She also hosts a great podcast called the Energy Thinks Podcast. Just had the CEO of Williams, Alan Armstrong, on. Wild interview. Got him on there for about 50 minutes, talking everything from how he feels the industry is going to change the COVID, how he feels that this kind of the switch of the generation that he's seeing in terms of what his executive board and all that. Just wild interview. Check that out. Energy Things Podcast, iTunes, Spotify. You can also check it out. I'll be putting that up on YouTube soon, I think. I need to get around to doing that. But you should also check out everything Adamantine Energy, www.energythinks.com. Sign up for her weekly newsletter. Trust me, your competitors are reading it. You should too. You should also follow this podcast, the 360 Digital Closing Bell, iTunes, Spotify, wherever you get your podcast. The best place for all of your energy market stuff. Connect and follow with Oil and Gas 360 on all the social platforms, Twitter, LinkedIn, Facebook. We just posted a press release last night talking about the huge find that Apache had at Block 58. What was it? It was I think it was, I don't have it up in front of me. I'll get it up as we go through other shows. I think it was over like 1,400 feet of pay. Woo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo-hoo
Hey, also Apache is participating in the oil and gas conference and one-on-one. If you're an investor and you want to talk to the people at Apache, sign up for the oil and gas conference at.
We'll run over at the end of the show who kind of list of presenters and all that jazz, because it's going to be really sweet. But guys, check out theoilandgasconference.com. Stu is also in charge of another great energy thought leadership podcast, the Energy 360 podcast by Enercom. And we're kind of we're kind of pulling off the gas a little bit. And we had over 50 we were cranking out 2 to 3 a week religiously for about 3-ish months before we decided to tailor it down these next couple weeks, because we've got the oil and gas conference coming. We're doing a bunch of pre-records for that. So we're not stopping the pre-records. We just can't quite air them yet. But do we have anything coming up, and do we have anybody you're eyeing for once this conference gets done?
Yes. We have some very big worldwide folks already on the books, and people were clamoring to get on, and I've had to push them out. One of them is Worldwide Oilfield Service Corporation that has seen it all. They actually run medical supplies to offshore fields.
Ooh,
So we got some cool stuff going on.
I love it. That makes it's exactly what I want to hear. I've got some guys clamoring in my DMs to get on that podcast. I'll have to run by you some international stuff. So I figured you might be interested. We'll have to figure it out. But we've released some really good ones. The one we just did with TGS has gotten a lot of traction, specifically on social. I've been seeing the numbers on that. Woo-hoo. So good there. You know, you're gonna say what you say?
They got a lot of traction. We also had an excellent one from Inveris on the Oklahoma regulations. That got a lot of good traction this week as well too.
Yeah, I need to honestly, I cut that one up, but I didn't actually listen to the full thing. So I need to actually sit down and listen to this. The first, the 10, 15 minutes I caught of it was really good. So you guys can check all that out. Energy 360 podcast, available on the world's greatest website, oilandgas360.com. I mean, I've kind of been delaying the inevitable because all we have to do is just chat earnings, but I think it's time we go ahead and do it. I mean, that was really, it was the story of the week. And if you go on any website and they don't tell you that, they're wrong. So that's why you got to go to oilandgas360.com because that's what we have as the lead story. I mean, when we look at just the raw list, let me just kind of read you we're not going to go over everybody who released earnings. We don't have that kind of time, nor do I have the desire to actually do that. But I think there's some select companies we can go over that glean some insight into different parts of the industry and maybe where that lines up, but also kind of breaks from some of the theories that me and Stu have been throwing out. So I'm just going to roll through right now a fat list of what we had. Week started July 27th. EQT, 28th, we had DTC Energy, National Oil Well Varco, hiring a business development manager I saw on LinkedIn today. Pemex came out, Edison International, Enbridge, Enterprise Product, Hess. Now we get into July 29th, which is 2 days ago. Hess, Liberty, One Oak, artist formerly known as Encana, Hess Midstream, Neighbors Drilling, Concho, QEP, Transocean. Now we're into the 30th, CNX, WPX, Intero, Apache, Conoco, Southern, Cabot's. Now we're talking about what comes out today, so we don't necessarily have these numbers yet, but we'll have them for the closing bell for sure. Cabot, Exxon, Dominion, Chevron. Woof. What a list. And so really, I mean, it's not your pure Permian players. I mean, we still have it's much more of your bigger, what I would say more integrated companies who might be a little more bigger. And that even makes kind of the theme of what happened this week worse, I think, because when you look at that, when you read off that list of companies, those are some big boys. I mean, yeah, you have some of the bigger gas and oil producers in that section. I mean, outside of, I don't see Pioneer, and I don't really see, there's some scattered ones that we're not seeing. I mean, Parsley's going to, but really, I mean, that's a big list of some of the larger, and the theme of the week was not good. Not good. There was a lot more. Well, one, we saw a lot of cheating on crude oil volumes. We saw some cheating. Now, that's okay. People still need to make some money, but we saw some cheating. So, and that's okay. We also saw.
Yes, we did.
Yes, we did. You guys go read the 10Qs. I'm still pouring them over. Go read the 10Qs. We know who's cheating or not. But really, the biggest thing that I saw, I mean, we'll start with the natural gas companies, specifically Enbridge, Enbridge Enterprise Partners. Natural gas did well. You saw, I mean, Enbridge had 40% increase in revenue year over year. They had a profit of about $1.3 billion over about $8.4 billion in revenue. So that shows you the resiliency of a natural gas physical infrastructure. And this is why Warren Buffett buys Dominion. I mean, why it's for that quarterly statement right there is the reason why he buys it. I mean, and Dominion's going to release later today their quarterly. I'm going to bet it's going to look very similar because that's what you saw in all of these. Hess Midstream turned a partner when Hess Midstream turned a profit when Hess did not, and they can include it in their non-GAAP accounting software, and they still don't even turn up. Unbelievable. So we'll get into that in a little bit.
Michael, some of the people we did see this week are all midstream.
Yes.
Midstream are still tough.
Midstream's competing right now. Midstream is doing very well at competing. Our friends over at Liberty, not good. I mean, we saw, just to kind of give you an idea of how hard the oilfield services company, and this is specifically, and Liberty is one of the smaller public service companies. There are way more private companies that may not necessarily be as big as Liberty, but you can probably follow the same, I would just say, scaling factors. Because to give you an idea, last year, Liberty, they do other stuff, but mainly they do fracking. That's the majority of their business. $542 million in revenue. This quarter's due $88 million. So to give you an idea of what these, and that's gonna be the same if if all you do is workovers. You're gonna see the exact same type of percentage cut. Unbelievable.
Chris, right, the CEO over there, he is outstanding. All the employees are outstanding. And when they had financial difficulty, I have to go fact check the number, but the board, I mean, all of the
60%, I
executives,
remember.
exactly. That's the kind of leadership that is right in there with the truth.
Yeah, and I mean, but you look at the numbers. I don't know how much that's going to help. I mean, and this is their. I mean, you want to talk about Liberty is one of the few companies that when I read in their earnings call, COVID just killed us. You can believe it. I don't believe that. We don't need to get into it quite yet, but like you read it on some companies. I've been reading it on some companies' byline, and it's like, well, you're just using this as an excuse. So you actually, when you read when you read that in an earnings call and you hear that you can actually believe it because the numbers fairly bear it out. And the other interesting thing that I saw, so yesterday we saw Concho, and Concho is a really, and as we know, is based in Midland, with headquarters there. Really good stuff over in the Permian. Some really good rock. Now they're and they're just because they've just been around for a while. A wolf. You look at their quarter looks okay. On the face, you read the headlines: $474 million in revenue, earnings $1.13 per share. But the stock price is down. Why is that? You pull in $1.13 per share, stock price is down. It's down 7%. Why? Well, you got to dive into the numbers here, and this is people where we talked about it lightly in quarter one when quarter earnings were, but the difference between GAAP and non-GAAP accounting methods, and I mean, once you kind of understand what GAAP actually means, it makes sense. GAAP stands for Generally Accepted Accounting Principles, which is a standardized way of doing accounting. Well, if you throw the word "non" in front of it, that means it's not generally accounted practices, which basically means you can do whatever you want. And you can't do whatever you want, but you really can. That's where all of these, it's really non-GAAP accounting principles is what saved shale oil and gas, I think, over the past 5 years. It's one of the key savers because people went from, well, we don't need to look at revenue. We don't need to look at profit. I want to look at, people were looking at profit per foot you drill. I mean, there were some weird things getting thrown out in these investor. I mean, you'd see a slide deck and it'd be like, we made $37 per foot we drilled. What? Like, what does that even mean? I don't, that's probably a terrible example. I mean, those are some of the things. It was unbelievable to see.
EBITDAX, earnings before tax and all that, and then before exploration. Then you got EBITDAC, which is earnings before taxes and COVID. That's a new one.
Yeah, it's so. What's funny is if Concho decides to come out and they say, $1.13 earnings per share, but their stock price is down. Well, what does that mean? Well, the issue is when they give you that earnings per share in the byline, that's a non-GAAP number. So if you actually read the article, the headline says earnings per share $1.13. Well, because that's what happens. This is how the headline gets grabbed. We all know how the headlines get made. And And then you go in and you look and you read the numbers, and that's a non-GAAP number. And the only way they were to get that is if they subtract out the derivatives losses from their hedging. So really, they lost about $200 million in the quarter. That earnings per share should be about negative 13. They got about $1 increase per share, which is unbelievable. But that just shows you the difference, guys. So please, when you're reading these quarterly reports, GAAP versus non-GAAP, because trust me, traders are looking at GAAP. They're not looking at the headline because they don't get the headlines. They're in the terminal, and they know the numbers that they're watching. And once it releases, it autofills, boom, they trade. So that's where I get a lot of questions. Well, there's positive earnings. Why is the stock down? Well, read the report. There's got to be something in there that people don't like, and generally you can figure it out fairly quickly. Whether it was way low, a lot of these companies, some of these companies, they were cheating on oil production. So that companies, stock investors didn't like that. Let's see, impairments. A lot of this stuff. So like big boys, this is another thing you're going to see. So like Conoco, Shell, Exxon, they're all writing down assets. Well, it's going to be very interesting to see what their GAAP versus non-GAAP, because when you write something down, you can kind of slip that out of your non-GAAP accounting metrics and, hey, we turned a profit. No, you wrote down $22 billion of assets, but in a you know what I mean? You can kind of, I'm not a CFO. It'd be interesting to really actually kind of sit down with somebody and have them explain what the difference is and how they, and how you can do it. But maybe that's something you got to give to the podcast. So we got to find a CFO willing to sit down and explain the difference between GAAP and non-GAAP. That's what we need.
Honesty and dishonesty. I've always hated EBITDA and EVA, whatever. It's EVA, whatever you want to make it as well.
Yeah, so we have some other highlights. Apache actually turned a really good quarter. They actually released. This is an idea where negative earnings per share 74, stock went up. Why? Well, read the fine print. One great find off Suramine. They just announced Block 40, so that has something to do with it. That's not all earnings. That stock price yesterday, even though they released earnings, is not all necessarily because of necessarily that they lost. Their earnings, even though it was negative 74 cents a share, it was okay. It beat expectations, but it's still negative. The fact that they, baked into that increase yesterday, it was like the 3-ish%. What is the Apache at yesterday? They're up now. Now they're down a little bit. They were up. I think it was like 12%. It was something big yesterday. They were up. And that was a lot to do with that Suramine find, which has turned out to be unbelievable, Stu, the amount of recoverable oil that's there. Because that's offshore where again? I'm not good with this stuff. Suramine, right? That's his country.
Yeah.
Cool. So whatever that is, I think it's somewhere South Africa, I'm pretty sure. But we have, that's.
I think my internet connect.
Yeah, you've got terrible internet, Stu, but that's okay. We could continue to work through this. Really on my end, Southern Gas Company came out. So here we go. Southern Gas Company came out $4.6 billion in revenue, only down 9% from a year ago. They actually turned a positive earnings per share. Stock price fairly flat. So that's something where, gas companies and that gas infrastructure is doing well. And I'm just trying to kind of pour over my list of earnings here. And this is where, when you look at a holistic view, I think, 2 weeks ago, me and Stu came on this podcast and said, okay, here are the things we're thinking about for earnings. And we said, we think natural gas is going to do well, and we think international is going to do well. And one of those was right, and the other one was wrong. The one that was right was natural gas companies doing okay. Now that's not something that I don't, and that's not an opinion that just me and Stu shared. That was an opinion shared by a lot of people. So we didn't really walk out on a ledge per se to be like, oh, natural gas infrastructure, natural gas companies are going to do well in quarter two. What I think we walked a little bit on a ledge on was looking at international earnings and the international blend. We have been very hot on the international scene for a while. It makes sense. Stu is really turned the international news desk into an internet phenomenon. The traction we're getting on it is unbelievable. If you can actually see the numbers of how much we're shifting from U.S. to becoming, almost a really good blend of 50-50. Quarter one, Schlumberger came out with a surprise. Schlumberger is a really good example of somebody who competes heavily both in the international and the U.S. market, and they compete differently. They're really different business. Now, I wouldn't say different business models, but they're very different business units. You have people, you get hired by Schlumberger International. I think it's a different company. I don't know how it all works specifically. I'm not sure the legal structure, but they really operate as separate businesses. And obviously their North American business in quarter one took a hit, but their international business was up 19%. Big surprise. And so that's where, that number, along with kind of reading the tea leaves that we saw, especially sitting in on these energy expert interviews with people who provide services to international companies, and we heard from, 10X Technologies that they were seeing the biggest growth internationally. We were following all of these stories on top of reading some of the Q1 earnings tea leaves and saying, we think international might actually be a positive. It wasn't. Schlumberger come out and actually got decimated internationally. As we saw last week, we covered it. As we look at some of the companies that have released, Conoco came out. I mean, you talk about all the big international players that have come out recently, and some of these don't necessarily make it. It's not necessarily been good. Schlumberger lost money internationally. Halliburton, they're basically completely out of the international game right now. They're only because of all of this. BP, Shell, historic losses. As we remember, they wrote down $22 billion, and about half the charges were just attributed to its gas business. But they came out with their earnings. What do we got here? Second quarter loss, $18 billion for Shell. And that's completely international related. They don't operate much. They operate some here in the U.S., but you want to talk about an international, and this is a company that can afford to not necessarily throw their non-GAAP numbers up front. They don't really care. They can afford this. $18 billion loss. Woof. Now, okay, that's, you got to remember they did a $22 billion write down. So that number's a little obviously inflated, but they made $3 billion last year in the same quarter. And first quarter loss since the third quarter of 2015 for Shell. So, I mean, that is an unbelievable number right there. And I think we were maybe a little bullish on what we thought the international game would be. I think it's going to recover quicker than if we see oil stabilize at $40, but it got hit just as hard in quarter two, specifically through this COVID, as everybody else. I think really the one, I think what this confirms is the one shining light through all of this is natural gas. And again, it's why you see companies like Berkshire Hathaway, is owned by Warren Buffett. It's why you see them buying. It's why you're going to see these. If you own physical natural gas infrastructure, you're going to be in the game, and you're going to be profitable, Stu. That's my big takeaway. I think we hit it on natural gas, but I think we swung and missed on the international. I don't know what else the other takeaway you have from earnings, but that's what I've got.
What I did see as a consistent is when you take a look at the ones that did well, I was double checking on the ones that I did, and they all had ESG plans. So anybody had a sustainability and ESG, it seemed like there was a correlation. So I'm trying to get a better number.
Yeah, no, it's I completely agree. I think it's a good. It was interesting earnings. I think, in terms of it was as bad as what everybody thought. Pretty much everybody lost. In terms of this week, it's not, the outlook hasn't been good. Again, cheating on volumes. It'll be interesting to see how some of these we see some more pure shale players come out next week, and as we fall in the next 2 weeks, it'll be very interesting to see. Like, I'm interested. Company does release till August 6th. Parsley. I mean, Parsley's coming out August 6th. I'm interested in them. Laredo Petroleum, I'm interested. Devon, I'm interested in. Continental, I'm interested in. Williams is going to come out as a natural gas player. Interested, because that's going to continue to confirm. So those are my two early takeaways. I don't want to pound on them too much because we got some other stuff. Interesting story that ran on Oil and Gas 360, and we talked about this in the closing bell. Blackstone, actually, who owns this new company called Beacon Offshore Energy, raised their stake in the Shenango offshore discovery down in the Gulf of Mexico to 47%, up from 16%. They actually bought out logs, the firm log. And what's actually funny is Beacon Offshore Energy. I have a buddy who works for Schlumberger as an offshore mud engineer. Beacon's only been around since February. So he'd been working on BP rigs for like 2 years, just doing mud. He finally in February got switched because there's this new company he was telling me about, Beacon. He's like, he never heard of them. But he heard they were all ex-log employees. So then now they ended up just buying out the company in their own thing. Some wild people, though. I've heard these guys are cowboys, Stu. I've heard they're some of the things that I've heard it's a little wild off there. So good for them. It's only a $250 million project that's actually it can invest and they're expected to generate about $1.3 billion in cash flow. And it's, the production forecast is set to begin in 2024. So it's going to be a long time before you start seeing that. But $250 million, spread that over 4 years. Yeah, the numbers work. Might as well. I mean, and so this is where it'll be interesting to see, capital, probably still going to be able to go offshore. And that was another thing. Transocean released earnings positive. They were up 9%. And now they're, probably one of the few companies that are going to, be able to still sell offshore rigs. But hey, they're signing contracts. They got assigned to this rig. This one's actually going. I read on Twitter. This one's going. This is a 12,000 foot development. They're going 12,000 feet on this, or 20,000 feet, excuse me, on this one. Woohoo! Could be the longest one in the Gulf.
For the Michael, you and I talked about offshore being one of the ones that actually survives very well, but also LNG carriers, LNG manufacturing, people making part LNG. The heavy industry is still a long-term good play right now.
Yeah, no, and especially just because the volumes are going to be able to make up for a lower oil price. I mean, it's just as simple as that. And I think banks are still willing to provide cash. I mean, you think Blackstone may have. I mean, Blackstone's a little different. They may have the cash on hand to do this. But you think normal people, so it's very interesting and it'll be very interesting. I've got, Beacon Offshore Energy, wild rig they're running. That's all I'll say. Now, speaking of rigs, rig counts came out yesterday. Now, remember, Baker Hughes drops their stuff today, but if you're an Enverus subscriber, which we're not necessarily, we love those guys over in Enverus. They don't necessarily give us access to the rig data, but they do to S&P, so that's where we pulled it from. Rigs down 6, not good. We were down 2 last week, 288. Permian did gain 1 rig, though, so we see some activity going up. Rigs were only lower in the Eagle Ford, but the Marcellus shed 1. Really what happened was we lost some offshore rigs. So it's good to see Permian rigs tick up a little bit. I mean, really, talk about flattening the curve, sort of holding steady. They're good to see them raise up at 1. Platts Analytic, Mark Andre, here's a quote I really liked. We are expecting to see some slight up and down movement into the 280 to 300 rig range until something happens that would entice operators to make a move and a significantly increase or decrease rig activity. So, that gives you an idea. We're sitting at, 288 rigs, probably going to, is what we're thinking. They're going to stabilize somewhere around this point. So it'll be interesting. As we heard from Kevin last week, $40, $45 oil is probably not new rig capability, but 50, 55, 45 to 50 maybe, and specifically 55 to 60. So that'll be very interesting to see. Stu, what do you have on the international news desk for us?
Well, Michael, we had a really good week in the early part of the week. You and I had our week look ahead podcast, and we really talked about the troubles in the Mediterranean and natural gas. We talked about the new technology that allows for natural gas and hydrogen to be pumped in on the same infrastructure. So that being said, there's not necessarily a war, but it's almost a Cold War going on in the Mediterranean for gas pipelines. And so I was right second time in my life. The
What do
next
they say?
day,
A blind
Turkey announced
squirrel
that their
finds
warships
cheese
were
once in a
coming
while.
back. Yeah, I found my wife, so I'm lucky enough to find that. But
Fair enough.
uh, I feel sorry for her. But anyway, so it's really nice because that whole play in Europe is defining what the rest of the world is
Yeah.
going to be doing. So that was really cool. And
Stu, you've got some terrible internet, my man. You're on mute now. I don't know what's going on. So, good international news desk stuff. I think it's time to just go ahead and dive into segment 2 and cover what's happening in the week upcoming in oil. As always, guys, this is sponsored by Sandstone Capital Group. You guys do insanely good research and provide all of the levels from the energy solution. Guys, just check them out, sandstonecg.com, 949-561-1818. I promise you guys, they will help you solve your technology, your energy technology problem. When we look at oil this week, I mean, it was I would say it's a bearish week. I mean, we saw a spike down to 38.80 yesterday, specifically off some pretty terrible earnings and coronavirus stuff, but we've since gathered now. We're still 40.26 right now, and trading market. Pit just opened about 30 minutes ago, so very volatile right now. So we see any huge swings, I'll let you know. I boomed the 30. It's kind of funny. So we boomed to the 38.80 level, and then that's exactly where it hits before it rebounds back up. So I'll probably instill that as a lower, as our lower level here, but I'm not as concerned it's going to hit that. It's clearly acts as a pretty strong point of resistance, right, or a strong sign of support, which is really, really good. Currently bouncing between 40.17 and 40.48, which is kind of two levels I really like based on some volume benches. I also like 40.62. There's a really, really interesting chunk. It's been a really nice, afternoon session, or really, it's been for the majority part of the volume in the morning, got split right there. So I like that. Point of control for the week is 40.27, though. So really be nice to see a rise and hopefully knock that out here soon. 40.51 is a level I like. 41.87 I like as a top. We only, it's a pretty strong side of resistance. We've attempted to break it twice, haven't seen it. So structure moving this week is fairly bearish, but I wouldn't take too much of concern as long as we can keep that $40 level. I think that entices operators. So these continue not turning some production on, but picking and choosing where they're going to attack and maybe doing some new drilling. When we look at the EIA, it was a big number. So field production stayed same. We only had 11.1 million barrels for U.S. field production. Crude inventories on the total week were down 10 million to 525 million. Cushing crude stocks dropped, which is really, really, Cushing crude stocks dropped, rose just a little bit, which is good. Normally we've been seeing DOE. Normally we've been seeing international, or normally we've been seeing everywhere but Cushing drop. But I had that flip-flop, excuse me. We've seen everywhere rise but Cushing fall, and now we just saw the opposite. Cushing decided to rise this week, and the rest decided to fall, which is good to see. We're finally utilization up a little bit, up about 2.5% or 2 full percentage points, 79.5. That's a good number for demand right there, especially trying to get that above 80 would be great to see. Recent gas prices about 2.18. All that brought to you by Intercom Analytics on the oil and gas via the world's greatest website, oilandgas360.com. I mean, that's really all I've got for oil this week. I mean, really, from a trading level, I wouldn't trade oil during the week of earnings, but also oil price doesn't necessarily have anything to do with earnings. So if you do want to trade oil, I mean, really the big topics I'm thinking and I'm looking for is, continue to watch these coronavirus numbers. I think there's some demand numbers that you're going to see pop in and out that could be interesting. I think there are some select companies that have some earnings that you should pay attention to, but really I think watch for some of the watch from some of the DOE stuff coming out. There's some very interesting reports that have been dropping, and just really get tapped into the order flow. I can't preach this enough. If you're going to get in and actually decide to trade oil right now, gotta run order flow. If you're trying to read price action, you're going to get yourself queued up in a ball. So I know Stu's having some trouble with internet. Do you got anything we need to cover before we let these guys go? No, it looks like he's good. So, all right, well, we're going to go ahead. We're at the 35-minute mark here, so I think it's a good chance. Thank you for listening through us as we barrel through earnings. Big week coming up for earnings. But, guys, we're going to go ahead and let you get back to work. Thank you for checking out the 360 Closing Bell here on iTunes, Spotify, and YouTube, and the world's greatest website, www.oilandgas360.com. We will see you guys this afternoon for the digital ticker.